Okay, folks, pretty stable day. We had the House passing new stimulus, we had bond yields stable out a decent amount, and as a result, you're certainly seeing a lot more calmness. And while obviously the whole inflation bond yield thing was a huge overreaction anyways, many may be feeling that, hey, maybe this is just a little bit too soon to be done correcting. How do we balance, Charlie, our potential for upside with our risk of potentially more downside? How do we set ourselves up to win if it's smooth sailing from here, but also set ourselves up not to lose too much if we have more panicking over the next couple of weeks? During pretty much any market condition, your goal is to take good deals on high conviction plays or exploit short-term fluctuation on short-term plays. And so today I want to talk about one of the sectors that I'm very, very bullish on and I think is a good value right now. This is a sector that in my opinion is one of the best mixes. You have the mainstream investor and the mainstream investment media thinking that, hey, EVs could be a huge fluke. It may be a huge bubble. EVs are not going to be the future. And that means that during panics, they get oversold dramatically. But on the other hand, you have some pretty strong damn evidence that EVs are going to be the future. In my mind, the question isn't so much are EVs the future, but rather which companies are going to be the ones that gain the most from this. To people that don't put any work in or to the media that wants to profit off your clicks, the truth is that for them, whether the future is coming is based on how the stock is trading. If it's trading down, the future's not coming. If it's trading up, the future is coming. But for us, we don't really look at the stock price as an indicator for what the future is going to hold. Instead, we look at our own due diligence. And so in this video, I'm going to be talking about some of the EV stocks that I personally am looking to buy, some other ones that I may be picking up a little bit longer down the road, and some ones that I definitely won't be picking up at the current prices. And the only thing that I ask in return is that you hit that ravishing like button and also don't forget to subscribe. And also, this video is sponsored by ZipTrader U. Truth is that we find that a lot of people just kind of aimlessly dabble in the stock market, take on random plays, practice random different trading tips from all different places online, and then they feel kind of lost. And the reason is because they don't have a clear structure. And the goal of ZipTrader U is basically to give you that structure. As a member, you'll get lifetime access to our 8+ hours of step-by-step lessons, our private chat, and of course, our often cited daily morning briefings and price targets. Of course, though, when you join ZipTrader U, you expect top quality, right? So we expect top quality effort from you. And a lot of people are like, what do you mean top quality effort? I mean, you want to be putting the work in. So something to think about if you're considering joining. We do have a coupon code down below, YouTube15, which will get you 15% off at checkout. Okay, quick update on our plays. So this morning, Tilray announced they secured New Zealand approval for medical cannabis products. A couple weeks ago, we talked about how Tilray had a partnership in the UK and how this is solidifying Tilray as more of an international brand with exposure all over the world, and that you'd likely see some more partnerships in the upcoming weeks. And that's basically what happened today. Tilray can bring the devil's lettuce to a lot of countries that may not be growing it themselves or have it legally able to grow themselves. However, the MJ sector as a whole was just not having it today, and the entire rally on the news was eaten up. However, eventually you're going to see the value shine through again. Okay, in terms of our short-term, more powerful plays, we talked about COS and Xpev this morning in the briefing, both big social sentiment boost stocks from Wall Street bets. They were up in the pre-market, and as it cooled off, it was likely set to rally as volume increased at open. There's a combination of high short interest and high social sentiment boost that makes me want to call out a lot of these plays. However, keep in mind that these are very, very short-term plays, and in a lot of ways, it's kind of like playing with fire. If you keep the fire in a fireplace, it's great. It's all dandy. If you let the fire go around your house and burn your damn house down, then that sucks. The way that we talk about managing plays is either by having confirmation and validation, which are the breaks above and below the SMA line, give or take, and or a trailing stop loss that's about 5% or 10%. If you're playing with fire, that's basically the fireplace that you want to have it in. And this goes back to playing your cards right. When you get the cards, you play them right. If you don't get good cards, you have to play them the best you can and then control your risk for when they don't work out. Okay, next, I want to talk about one of the more boring plays, BA, one of our recovery plays. BA, we talked about this guy on Sunday's Top Stocks video, but we set our price target of $300 last week. Fairly shortly after we set the price target, it found a bottom at around 213-ish. And then since then, at that bottom, it's had a pretty damn nice uptrend. Even today, it was up like 6% and a little bit more after hours. Probably going to slow down a little bit, but you will eventually get to that $300 price target, in my opinion. Okay, to the topic of the hour, the EVs. Now, the first EV I want to talk about is NIO. NIO is one of the best deals that I see right now, but NIO has three things working against it, two of which are temporary in nature, and then another one that's going to be lingering for many years. The first one, and this is the most temporary, is the tech innovation sell-off has really crunched NIO and all of its competitors, and that has accounted for a lion's share of NIO's drop. So once that blows over, if that blows over now, or if that blows over 60 days from now, that's something that's temporary in nature and should give us some more upside. The second problem is also temporary, but it's a little bit more damaging to NIO specifically, and that is the chip shortage. We talked about this a little bit, and I talked about how I was going to be downgrading NIO because this chip shortage is going to be lingering for a while. But still, this is something that's a legitimate but also short-term hit to NIO's fundamentals. It's going to be resulting in lower deliveries, lower production over the next couple of quarters, but by the end of the year, you should start seeing that pick up dramatically again. Third thing that's against NIO, and this is one of the ones that's going to be lingering for a long time until they really prove themselves, is that they're in China. Yes, China is going to be the most lucrative EV market for the foreseeable future. But if NIO had the numbers, infrastructure, deliveries, and brand reputation that it has, but it was based in the US and was doing all that in the US, then it would be worth substantially more. Companies, especially growth companies, trade at a much lower valuation if they're in China because people are sketched out by the market, and they should be sketched out by the market. And that becomes amplified when you see companies deal with setbacks such as an overall market tanking or chip shortage. The way that I see this though is that NIO is a gem in the swamp of China. Yes, sometimes the swamp gets all over it and you can't see the damn gem, but this is still a gem. And at these prices, this is a good deal for the gem. Okay, next I want to talk about Xpev. Now, Xpev basically has all the same problems of NIO. However, because it doesn't have the same level of cult following, reputation, and brand recognition as NIO, it's down a lot more from highs. If you remember, NIO is down like 40% from highs, whereas Xpev is down over 60% from highs. And yes, Xpev is inferior to NIO in terms of deliveries, in terms of production capacity, in terms of overall infrastructure, and in terms of the growth stage that it's on. However, those differences are already factored into their varying market caps. But the inefficiency was that Xpev was beat down more as a percentage of its market cap as compared to NIO. And that's simply because of the brand recognition, the market confidence, and honestly some of the cult following that NIO has garnered over the last year. Xpev couldn't take the heat the same way that NIO can. And that, in my opinion, is a huge market inefficiency and one that we can exploit. Xpev just reported great earnings. They reported deliveries rose 302% compared to a year ago. Strong deliveries both in January and February despite the chip shortage. They've also invested huge amounts of capital in expanding service and sales networks to 160 stores and 54 service centers that cover 54 cities in China. They invest heavily into research and development, and all around their cars are competitive in looks, battery, and performance. They are definitely behind NIO, but in terms of what they offer, they're pretty competitive at these prices. Now, I don't cover Tesla all that much because its valuation is often factoring in a decent amount of growth as it is. People who like EVs tend to go and buy Tesla first, and then only when that's at just insane levels of valuation do they go and look at other plays, and that kind of creates this weird situation where Tesla's always trading really, really expensively. Of course, the flip side of that is that the growth rate and the growth potential for Tesla is huge. But sometimes you really have to be careful because a lot of these companies, if they doubled again, they would like swallow up all of Europe. But of course, for long-term holders, Tesla's getting back into that good deal range. I think that when you're working with Tesla, you're working with something that's a completely different beast than the rest of the market. I mean, in a lot of ways, Tesla is basically the king of the growth sector. I mean, extreme combination of actual value, hype, and just huge potential. For me, I see Tesla as more of a long-term investment as compared to a short-term play or a long-term play. You average in on dips, then you just ride the wave upward. Okay, next, Cciv. So I talked pretty in depth about this yesterday. We talked about how I see this as a $100 billion market capitalization company, which values it at about $62 a share. You can go watch the video from yesterday. That was a pretty decent breakdown in my opinion. I did say 100 million instead of 100 billion, and I think everybody got that I was misspeaking though. But anyways, my price target's a little bit lower than that valuation projection. It's at $55, and that's assuming that we're looking a year or two ahead, and that in the fall, you're gonna start seeing those Lucids roll off the lot, and that starts spinning in the headlines. Okay, another one is Ride or Lordstown Motors. In terms of pickup truck EVs, the Lordstown Endurance is one of the more competitive ones. Wait, hold on a second. I got some garbage on my screen. Okay, that's better. But yeah, as I was saying, this is more of the more competitive ones. And of course, the American pickup truck market is huge. And Lordstown Motors are setting themselves up nicely to be one of the contenders to actually exploit this market. And given some chance of them making some headway with this truck and some improvements down the line in terms of performance, battery life, and also look, then I think you can make a very, very good argument for snapping this up. It's also true that we're trading way oversold on their 180-day chart, implying a very sizable chunk of upside and a fairly de-risked position. Now, one that I'm waiting for a dip on is ChargePoint. I did just put a price target of $40 on it, but in terms of risk versus reward, ChargePoint, of course, has the largest online network of independently owned EV charging stations. This is an interesting way to bet on the entire race of EVs instead of just one horse. Obviously, all EVs are going to have to plug in somewhere. And so ChargePoint being one of the largest means that that's going to be a pretty decent benefactor. Only problem is that everybody else has already realized that as well, and it's already factored in a decent amount of its upside. For me, though, if this got to the mid to low 20s again, it would be an obvious buy. And at that point, the risk versus reward would be very favorable, so you're not paying too much for what they're actually going to offer. Anyways, folks, those are some of the main plays that I'm looking to either buy or are about to buy. I know there's some other EV plays that we like, but we left out, such as Workhorse, Lee, some of the battery stocks, some of the other charging station stock. You can see a full list of the price targets and the different plays that I'm bullish on in the entire EV sector in ZipTrader U. And you can go back to previous videos and watch what I've said about each corresponding company. I think I've talked about every EV company at some point on the channel. So if you look up ZipTrader and then the ticker, almost always it'll recommend a video where I talk about said ticker. Anyways, folks, if you have any ticker that you'd like me to discuss in the next video, go ahead and comment below. If you'd like to learn how to trade, would like access to our private chat and daily morning briefings, we'll go ahead and check out ZipTrader U in the comment section below or in the description below. I have a link. If you'd like 2 free stocks and you're wondering what broker to trade these stocks on, well, Webull is a fantastic broker and I'll put a link to them below. And as always, have a great day and I'll see you in the next video.